One of the things under the life insurance they look at is your age. The life insurance cover is not really an investment.
Hi everyone, I hope this video finds you well. My name is Martin, in case you're here for the first time. Na sisi ni watu wa insurance. We do reviews on insurance and also civic education. We are very intentional in educating our viewers on matters concerning insurance. If you have any question in regards to insurance, we always encourage you to post those questions in the comment section so that we can pick them up and do a video, a detailed video such as this one, just to help you understand insurance better and be able to help you. Before you buy insurance, you need to first of all understand what you're buying to avoid frustrations. Now, in today's conversation, as we have always done, we are responding to one of your questions, and this was someone who was asking, why is it that it's possible to have a difference in terms of how much people pay on premiums? Why ni kwa nini sometimes unapata mtu, maybe you have the similar product like a medical cover, but umepata I have paid a different premium than Mwai. So we want to look what the factors that contribute to the difference in premiums. Okay, so before we get into the conversation, I would encourage you to support our content by way of subscribing, liking this video, sharing and leaving a comment so that we can be able to respond to actual conversations, actual questions, because we want to help you while you are stuck. So definitely we have our analyst, expert. Yes, Mwai, who is going to help us have this conversation, and let's get into the video. So karibu sana Bwana Mwai.
Thank you, Bwana Martin.
Yes.
As always,
yes,
I'm very delighted to once again be here.
Yes.
To enlighten you on what is happening currently in
yes,
our industry, and to always educate you on matters to do with insurance. So there's something you have asked,
yes,
which is very important. Why is it that you could be of the same age with a person, but the premium
yes,
is different?
Yes.
Yeah, you could also find you are buying the same product. Could be education, could be medical, could be, let's say, motor. Unfortunately, you are paying a little bit different amount,
yes,
for the same product. What we usually say is this: an insurance cover is not like any other product. They are very special services, and there are a number of factors that we must look at before we even determine how much we shall charge.
Yes.
So let's take an example of a motor. Motor. Why we would charge possibly differently is for the same product is because of different reasons. So number one is the age. Age is a factor when taking an insurance policy for a motor. Now insurance companies are coming with ways so that number one, to individualize or to customize a plan based on various factors. And one is age, of course. We understand that you could be driving let's say a Toyota Prado, and you are possibly 25 years, and we have another mzee who is driving the same car, and possibly his age is 50 years. So one of the things we know is for those people who are relatively younger, you are likely to, I don't want to call it misuse, but you want kind of to compete on the road. So we categorize you as high risk, unlike that person who is elderly. We take him to be more experienced, and driving is not really part of fun, so to call it.
Yes.
So that is why you'll find that we have the same car, but because of difference in who is driving, we are charging differently. Number two is something called the age of the car. Apart from the age of the driver, also the age of the car is a factor. Yeah, we could be having a Toyota Prado but one car has a manufacturing date of let's say 29, another car, the same Prado, with a date of manufacture being 2017. The one that is old is likely to be charged higher because it's a high risk, or we suppose that this car could easily get involved in an accident because of course because of we call it obsolescence. Yeah, so that is another thing. Number 3 is something we call the type of the car. Yeah, we could be drivers of the same age, but the cars we drive also matters under insurance. So there are those cars which are very expensive in spare parts. Yeah, so let's talk of Subaru, yeah, Mazda, and possibly a BMW. Yeah, those cars, the spares are quite expensive, unlike a Toyota brand. Most of the time you'll find that they have the spare parts readily available, and they are very affordable. So that is some of the things that may make you pay more for an insurance of a motor. When you talk of a medical cover, it's a different ground. Yeah, for those people who are junior in terms of years, will pay more compared to those people who are let's say
the older might end up paying more because they are high risk.
So we are talking of
medical covers.
For medical cover, for persons below 10 years
or below 10 years,
they are more likely to pay or to be charged higher premiums than those people who are over 10 years.
So remember there's a time we had this discussion,
Yes.
We were talking about 3 categories when it comes to medical, especially when looking at the age.
Yes.
0 to 10, and maybe 10 to around
to 18 or 17.
18 or 17?
Yes, 17 to 65 or to 60 rather. Or we can categorize them into 4 groups. Yeah, from 0 to 10, 10 to 18,
18 to 60,
19 to
19 to 60.
55, 1955, 55 going upward. We refer them to as seniors. So what you'll find is for those people who are or individuals below the age of 10 and individuals above the age of 55, we will charge almost the same amount because of one thing. We call them the immunity is quite low, so they are very likely to go to hospital, so we charge more. Unlike those people who have now stabilized in terms of immunity. Like if I asked you when you last visited the hospital, you can barely remember.
Yes.
So that is why one of the things, that is the age.
Is the idea that the insurance wants a sure bet where they are not making losses? What's the idea behind it?
No, what happens is the insurance company categorizes them because of their frequency of visiting hospitals. So as even they make the plans, they want to adjust it so that they don't make a lot of losses. Remember, if it was a standard cover, we could have a situation when we are paying more than we are receiving. So at one point,
Not be sustainable.
not being sustainable. Currently, what is still happening in SHA, that is one of the problems with that main cover. That they have standardized everything. There is no kind of tiering, yeah, where we say this is tier 1, this is tier 2. So when something happens,
When claims begin to flow,
yes, they are kind
so
of
overwhelming.
yes. So that is the challenge. So we look at the age. We also look at the whether you have an existing condition, because you could be in that age, middle age of between possibly 18 up to 55, but you have been frequently visiting the hospital. So when we are onboarding you, we shall ask you one question: are you under treatment? So if yes, we want to understand why. Otherwise, but I must warn you, if you do not disclose this and then later insurance discovers that you are undergoing a medical treatment, what they will do is that they may decline to pay, because they believe in something called the utmost good faith, that we shall disclose everything to you, and you also are expected to disclose everything to us regarding your health, so that we can be able to charge that medical cover accordingly. So that those are the two main things when you talk of health. When you talk of the life insurance, it's another thing. We've talked of motor, we've talked of medical. Now under life insurance, there are various things that they must look at before they give you or they accept to give you the insurance. Yeah. So one of the things under the life insurance they look at is your age. The older you are, the more expensive it will be. The younger you are, the cheaper it will be, or the more affordable it will be. So this is the reasoning behind it. The person who is above, let's say, 50 years or 60 years, we know what happens at that age. You are very susceptible to illnesses like diabetes, blood pressure, and other critical illnesses. And because we are talking of life insurance, what happens because once you have those illnesses, you're more likely to go or to die. So what happens? So we must charge something a little bit higher compared to that person who has no illness at all. Because remember, under life insurance, if something happens and you happen to die, we take care of the family 100%. But that is based on what type of cover you take. There are those covers that does what we call income replacement. There are those that gives a lump sum to your family members. There are those that takes care of your burial. Yeah, that one is another factor. So one is the age. Number two is whether you have any illness. As much as it's a life cover, we also want to understand your health condition. Yeah. Number two is the term or the period you want to put your money, because the longer the person chooses to put their money with an insurance company, the cheaper it will be, and of course the more the output. But I must I'm not here to warn any person, but I want you to be cautious. An life insurance cover is not really an investment. It's not. It's basically something you are putting aside so that if you are no longer able to work, out of disability, out of death, or even out of critical illness, yeah, your family will not suffer. Yeah, you may see that if you do calculation like a business person, it won't make sense, but for these people who have money, it will make a lot of sense, because you are being told, you give us 1 million, and if you happen to die, because one thing is for sure, you'll die at one point. If you die, we give your family 20 million. Yeah, that is what a lot of people don't or ignore. Yeah, we are telling you, give us 1 million. If something happens, we give your family 20 million or 10 million for those people who are pro family. Yeah, that makes the difference. At the same time, look at this. An insurance is something we call, is more of a legacy planning tool, or kind of a trust, quote unquote, because whatever you inject under insurance, in the event of maybe your demise, the amount can only go to the designated beneficiary. Yeah, we have had scenarios when a person unfortunately have died without a will. So everything that he had worked for, unfortunately, goes to the wrong hands. It goes to your brothers, it goes to, I don't know who, it goes to mawakili. So if you had a life insurance, you don't need to worry. The insurance gives you guarantee that that money can only go to them, no matter what. So those are some of the things that will make your premium, either under medical cover, motor insurance, or even life insurance, be different, even though you could be of the same age. Yeah.
All right. So I think we'll do a separate video discussing about what you have talked about legacy planning.
Yes.
And also that the will thing.
Yeah,
how you can come up with a will and start investing as early as possible. Not because you want to die, but because it's something that is prone to happen.
Sure. Actually, what we say is this: you don't really buy an insurance because you will die. Of course, everyone knows that at one point, just like you know your date of birth, a time will come when you will die. That is there's a guy I heard him saying, no one is living here alive. Yeah, jokingly.
Very true. Yes.
Fight me, but everyone, you will not live here alive. So what we are saying is this: if you really want to protect your family, because there are those people who've been brought up in a setup where you were to rely on neighbors. There are those people who knows only charity, or those home for, what do we call them? No, the charity homes.
Oh, the charity home, yes.
Yeah, and you would not like your family, in the event you die prematurely, you don't want your family to really go through that hell. Sometimes, as much as you could be having a very good dream for that child or for that loved one,
you don't have control of future.
You don't have the control of the future. So that is why it is important.
Yes.
You think of life insurance from a different angle.
Yes.
Think of it as an invisible asset that can be redeemed once you are no longer there.
Yes.
However, it also guarantees you, if you live longer than expected, sometimes you find that umeishi sana. You know, that is also a risk.
Yes.
You can overlive. What if you and I don't know why, what happens, but those people without money, they
tend to live longer.
They tend to live longer than those people with money. So it's a God's way of punishing you.
I think we are going to look at we are going to have another video. There's so much to discuss in that line. We are going to have another video to try and demystify this life insurance thing. Because what they don't know how the difference between life and general.
They don't.
So I think we'll do a different video, and I think you have given us a good highlight. So make sure that you subscribe and turn on the notification bell, because that video is coming very soon. We don't want you to miss. So I hope you got the reason why sometimes you get difference in terms of premiums. You can have the same product with your friend, but you are paying different. So those are the differences, and make sure to leave us a question in case you are there and you are watching and you have something that is pending. You don't understand some issues, the insurance products, maybe hata ushaipata na maybe you have bought, but kuna kitu ulifika mahali maybe you got discouraged, either because you didn't have information first hand ukinunua.
Sure.
So make sure that you ask those questions. We are here to answer those questions one by one. And thank you very much for watching to the end, and I hope we give you value for your time. And like this video, share and leave a comment. And until we see you in the next one, God bless you and
bye.
Bye.